let's really try and understand what exactly is he looking to fix. We've got Rahul Chadha joining in on the show right now. Of course, it's been a meltdown that the global markets have seen. And, it's really pointless going through individual screeners and telling you what the state of the globe is. It's all a sea of red. There will be a lot of bloodbath on the street that we're going to see this Monday. But let's try and make sense of what really is going on. Rahul, hi, good morning. Just bracing ourselves here because even the GIFT Nifty, much like the rest of the globe, is seeing quite a bit of, savage cut, if you will. But tell me, Rahul, I mean, the big question is what should investors do? It's too late to throw in your towel right now.
Absolutely. I think the best thing here is to wait and watch. We've seen US correct nearly 18% from the highs. The way things are, probably we may see another 5 to 7% of correction. And hopefully the sense is post that cooler head should prevail. Look, what spooked the market is the size of these reciprocal tariffs and the very fact that these tariffs are coming into effect a week from now. The sense is that, look, the government administration here is pragmatic enough to realize that the issues of trade deficit need to be fixed. But this is not really the best way to fix this. What it does is takes the whole world into deep downturn.
Absolutely. And what one has seen, Rahul, is already is a retaliatory tariff from China. Many countries are trying to negotiate with Trump. It's a lot of flux out there. Where do you think this is all going to settle down? Do you sense that we're going to be headed in to the worst case scenario that's going to be a world or rather a global trade war? And is it a given that US is going to head into recession, as would perhaps rest of the globe?
Okay, so the way we've got to look at this is let's just look at the historical perspective of this. The problem over the last decade was China had overinvested. They were not really focused more on boosting domestic consumption, whereas rest of the world, US, Europe, had underinvested. So those two things are kind of getting corrected now. US with incentivizing local investments, somewhere controlling the excessive consumption which is happening here is doing the right things. But then again, it's really a question of how do you do it? Do you take a sledgehammer approach towards correcting all these excesses of last decades? And I think this is a mistake China made in 2021, and the economy went through a lot of pain for the subsequent couple of years. The hope is US doesn't do that. So right now it's still a posturing, and probably as we've seen 50 countries come and say they're open to kind of a huge access for US goods or zero tariff for US goods, etc. In coming days or whatever, coming weeks, the administration here responds positively to the overtures from the other governments and doesn't implement these tariffs. Because I think what happens is the whole business community would be in a flux, the consumer would be in a flux, and the damage to the confidence is going to be immense.
Rahul, the fact that bonds are rising on safe haven demand and the fact that yield is now sub 4%, what's that indicative of? And where do you think the dollar is going to head? And I ask purely because that's in some way going to dictate not just safe haven demand, but also what's going to happen to flows.
Yeah. So if you look at 10-year yields are going down because look, economy is going to slow down, and inflation, which was a concern, or strong economy, which was the base case scenario, kind of gives way to fears of recession, which is where 10-year yield moves down. From a dollar perspective, if you look at DXY, it's down 10% from highs, and this is kind of a pretty unusual compared to past risks of events when people have sought refuge in dollars strengthen. So this somewhere shows that today it is the US which needs to correct these fiscal deficits, correct the trade deficits. If you remember, we had these issues for emerging market in 2013. We used to call it the tapering tantrum for emerging markets, where some of these emerging markets, including India, were running high fiscal trade deficits, and it took a couple of years to correct that. I think the same scenario plays out for US. The concern here is the part to correcting US trade deficit should not be imposing 50% tariffs on the world.
Absolutely. I don't know if it makes sense, Rahul. It's a lot of flux out there, and people are just adjusting to what this new tariff regime is going to really imply. But How good or bad could it be for India? The fact that crude is sub 60, that in itself is a tailwind. We've already been through our fair share of correction. Sure, we're going to fall a lot with the rest of the globe as well, but a large chunk of it would perhaps be behind us. And of course, all of it depends on how the Indian government negotiates with the Trump administration.
So again, Indian economy is going to face the second order impact. Growth for tech companies is going to slow down. Some of these global capability centers, which have been ramping up big time in India, they're going to slow down. So you will see some impact coming on the export demand from India. But like the way you said, markets have done well. The India story was again of easing liquidity, government giving some of these tax cuts, etc., and economy picking up from the lows we saw in the September quarter. And that's reflected in the market performance. So today, as we said, India would be one of the top performers, YTD, etc. I think leave aside the tariff, there are bigger challenges for the country, and they come from a 2, 3 year perspective with all this AI automation, etc. What happens to the job growth? And somewhere, I think the Indian government should take this as an opportunity or a wake up call to get ready to the challenges of future. It's going to be a fast-paced world where every couple of years challenges are going to come at a country, and we've got to make sure that we are fully prepared for that. So I think that is what I'll say here. Again, from an Indian investor's perspective, next couple of weeks will give buying opportunities. We've stuck to large caps for 6 months and would continue to like large caps here, which offer value.
Rahul, right now, of course, it's a knee-jerk reaction, and which is why even precious metals are falling, both gold and silver. But could there be anything, which could be called as a safe haven and a hiding place?
So absolutely, I think gold would be a good hiding place. The only thing one's got to keep in mind is gold's done well. It's up nearly 50% in last 12 months, so it's vulnerable to some bit of a profit booking. One can be long treasuries here. Look, the view is if US economy is going down, treasuries are going to be heading lower here. The only thing is from a medium term, one is not sure with the kind of fiscal deficits US is running and with the foreign buying abating in the US treasuries, what happens to US treasuries from a longer term perspective. But medium term, yep, US treasuries would also act as a safe haven.
Rahul, great to have you on the show. Thanks as always for your thoughts. We're just bracing ourselves for what could be a tumultuous Monday, to say the least. And
if you like this video, then like, share and subscribe to ET Now.